We're taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist at Standard Bank. Thanks so much, Nomvuyo, for joining us this morning. So the headline risk is still there, especially where we've got a limited data calendar, especially out of the US this week. Attention remaining firmly on the EU. Let's take a look at how you're viewing that scenario and the kind of currency impact you see this having as we progress through the week.
Morning, Alishia. Yes, you're right. The attention still remains firmly focused on Europe, and unfortunately doesn't look like the situation there is improving. What we've seen in Greece is a formation of a unity government. So while that brought some comfort to markets, it does seem that there's movement on Greece perhaps getting its second tranche of the bailout package. So while things seem to be settling down there, markets are increasingly turning their attention now to Italy, which has the region's second largest debt load, and that situation appears to be becoming increasingly unstable. There's a very big important budget vote that will take place tomorrow, and it does look like the Italian Premier's support is starting to wane, and this is happening at quite a crucial time for that country.
Just how much risk are you pricing in on account of that? Because we've had an ECB official confirming that the bank has considered threatening to stop its Italian bond buying off if Italy doesn't enact needed reforms fast.
It certainly is a huge risk, Alishia, because the contagion effect is what everybody is worried about at this point. That if Italy, with the tension now turning to Italy, what country would be next, for instance? So that's introducing a fair deal of volatility into the markets, and until the situation is firmly resolved, we're going to be stuck with a highly volatile situation, and this is of course going to be reflected in the currency. We've seen the rand holding below this 8 rand level currently, but of course should things continue or in fact deteriorate, the risk is that it would then weaken, and we'd be looking for a move to about 8 rand or 6 in the short term should things stay as they are currently or get a little bit worse.
Of course, those have been the facets of the G20 summit that have stolen much of the attention, Nomvuyo, but we also had the G20 calling for forex flexibility, a lot of emphasis being placed on China and its policies moving forward. How much did you actually read into that?
Well, it was an interesting development because up to now the G20 has tended to shy away from speaking out specifically on issues like this, particularly where they pertain to China, which tends to be quite protective of its currency. So in this instance, they released a statement saying that they were encouraging members to move towards a more freely floating currency regime to avoid extreme cases of overvaluation or undervaluation. And they seem to mention China within that entire report, not specifically in that sentence, but it was largely read into that within that context, China had been highlighted or singled out as a country that was a culprit in this regard, if you will, and they were praising China's efforts, and Russia as well, to move towards a more liberalized FX market.
Yep, when it comes to the FX market, let's take a look at some of the data that's filtered through this morning. Nomvuyo, on home ground, South African reserve data coming through, and we've had net gold and forex reserves edging up to $49.2 billion at the end of October. That where we had $48.6 billion, what the market was expecting. What have you made of that?
Well, it certainly was quite a positive development. September's numbers were disappointing, both on the gold and FX fronts, but we think that that was largely just a blip related to the Eurozone debt crisis. I mean, gold has a very strong relationship we've seen with liquidity, and as fears were growing that the crisis in Europe would turn into a liquidity crisis, we saw a big fall in the gold price, and that affected reserves quite strongly in September. What we've seen is the gold price come back in October, so that played into improved gold holdings. Also seen the SARB remaining active in the market in terms of accumulating dollars, and the fact that the dollar was slightly weaker in October after being quite strong in September helped to boost the relative value of the SARB's other currency holdings.
Yeah.
So on the whole, we saw an increase in both gross and net FX reserves, which of course is going to be positive for the currency, particularly with regards to helping to slow or counter the volatility that you see in the rand.
Of course, the big event locally this week is the MPC's decision on interest rates. That's coming through on Thursday, and many saying that we've got the combination of positive economic data, rising inflation, the market jitters that are about, and then the US dollar close to 8 that will keep the SARB sidelined for now. Is that the consensus from your end?
Yes, our view is still that rates will remain on hold this week, but we have to acknowledge that there actually is a very big chance of a rate cut, particularly when you look at the prevailing global situation, the deterioration in growth outlooks both domestically and internationally. One could certainly make a very strong argument for a rate cut, but for now we do think that given the balance of factors, the SARB is likely to keep rates on hold.